Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Brian Stutland, Chief Investment Officer at Equity Armor Investments. We're going to take a look at levels to watch in the Nasdaq-100 and some key trends in the Nasdaq-100 Volatility Index. Brian, it's great to see you again. Welcome back to Trade Talks.
Thanks for having me here.
Let's talk about the key levels that you're watching in the Nasdaq-100.
Yeah, I think when you look at the Nasdaq, obviously a few weeks ago, we had tremendous amounts of volatility and it seemed to snap back. The reason probably being, the Russia invasion may be off the table, traders trading like as if COVID as we know it is over. And so certainly some different aspects here. And as the Nasdaq is traded higher, we've now reached a level just a little bit above here earlier in the trading day when the Nasdaq, yesterday was up, more than 1.5% from where it is today. That's a level where I would look at, because if we can sort of get through that level, that's where markets sort of broke down. That's where I would be a buyer of the Nasdaq, looking for it to trade up, another couple percent higher from there. Let's say 15,500, 15,600. That would be my price target. But we haven't made it through that level yet. So I'm not a buyer yet. We've got to watch out for some of the levels of volatility that we're seeing, because there's certainly some risk on the downside if we can't hold these levels that we're seeing today.
Right. And of course, one of those is inflation. We saw the CPI reading at 7.5%. That's taking up the possibility of getting to 50 basis points in March and, potentially 7, according to Bank of America, by the end of the year. That's really challenging for the tech stocks.
It certainly will be a challenge for the tech stocks. And I do think, even though we've seen volatility come down a bit, we've seen the market rally and some buyers come back in, we still have the Fed watch on, and that's going to happen in March. And the traders are watching that. Like you mentioned, 7 rate hikes may be coming out, as Bank of America said. That would be a little concerning for the Nasdaq and the tech stocks. And I think seeing those inflation numbers that we saw today, I think that's why we're seeing a sell-off today. And that's why I'm still cautious. I need to see this market trade higher to say, hey, risk is back on and people are willing to take some risk here, given the higher inflation environment. Look, I've been talking now over a year and a half or so, well ahead of other people. We've made shifts in other portfolios to a more value play. I'm not saying get short the Nasdaq or anything, but I think you have to be a little leery. If rates are higher, how much will technology and growth be able to continue to move higher if that takes place?
So it seems as if these 1%, 2%, 3% moves that we saw to the up and the downside in the beginning of January, it feels as if this could potentially continue at least until we get that first rate hike where we see 1% moves either way then.
Yeah, I mean, when you look at VolQ, a volatility index for the Nasdaq, or the VIX, the volatility index on the S&P 500, they're still relatively elevated above the VIX, above 20. Historically, that's about a 20 area right now. So, basically, when you look at that there, you can see that, elevated area means that, hey, there's going to be some movement here. There's going to be 1% daily moves 2/3 of the time. That's what a VIX above 20 tells me. So there's still some risk on the table here. It's not all off, even though we are seeing volatility back off a little bit in recent weeks here. But certainly, we've got to watch what the Fed's going to do. If they're sort of changing the liquidity picture, that's going to raise volatility in the market going forward.
Right. And to your point with vol coming back over the past week or two, it seems as if the market understands, okay, we know we're going to get rate hikes. This isn't a surprise. Perhaps it might even be priced in. We heard that conversation come up. It just seems as if every time we get this inflation data and we keep hearing these headlines of worst it's been in over 40 years and so forth, it just sends a fresh shock back into the system here.
It does, because so many people have been used to, for the last decade, the Fed, basically the Federal Reserve put, I like to call it, where they protect the downside of the market and they inject liquidity into the market. And maybe that's not there this time. And so that's what has traders concerned. And I think that's why there's a little bit of a shift going on into that value play, so to speak, side of things. And that's how we kind of played it. Beginning fall 2020, we started leaning that way to add a little bit more value, add things that you need, not necessarily that you own. That might mean it's a little more difficult for the growth names, but certainly the large mega cap growth names are still in play. Those have had fantastic earnings recently. It's the smaller growth plays that might have more difficult.
All right. We appreciate the insight as always, Brian. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.